Welcome to our journey through the historical development of fintech. Fintech, short for financial technology, refers to the integration of technology and offerings by financial services companies to improve their use and delivery to consumers. Over the years, fintech has revolutionized the way we manage money, make payments, and access financial services. In this video, we'll explore the key milestones that have shaped fintech, from its early beginnings to the digital innovations of today. Let's start by understanding what fintech really means and why it's become such a crucial part of our daily lives. The roots of fintech can be traced back to the 19th century when the telegraph and Morse code enabled the first electronic fund transfers. These early technologies allowed banks to communicate and transfer money across long distances, laying the groundwork for future innovations. The introduction of the transatlantic cable in 1866 further accelerated global financial communication, making it possible to send financial information between continents in minutes rather than weeks. This era marked the beginning of technology's influence on finance. Moving into the 20th century, one of the most significant developments was the introduction of credit cards. The first universal credit card, Diners Club, appeared in the 1950s, followed by American Express and Bank Americard, now Visa. Credit cards revolutionized consumer finance by making cashless payments possible and convenient. This innovation not only changed the way people paid for goods and services, but also paved the way for future digital payment systems. Late 1960s saw the introduction of automated teller machines, or ATMs. These machines allowed customers to withdraw cash and check balances without visiting a bank branch. ATMs quickly became a global phenomenon, offering 24/7 access to cash and basic banking services. The convenience and efficiency of ATMs marked a major leap in the digitalization of banking, setting the stage for further technological advancements in the sector. The 1970s, electronic stock trading platforms began to emerge, transforming the way securities were bought and sold. The Nasdaq, launched in 1971, was the world's first electronic stock market. This innovation made trading faster, more transparent, and accessible to a broader range of participants. Electronic trading laid the foundation for today's high-frequency and algorithmic trading systems, which rely heavily on advanced technology. 1980s and 1990s witnessed the rise of online banking. Banks began offering services through computer networks, allowing customers to check balances, transfer funds, and pay bills from home. This shift significantly improved convenience and accessibility, reducing the need for physical bank visits. Online banking was a major milestone in the digital transformation of financial services, setting the stage for the internet-driven fintech revolution that would follow. The explosion of the internet in the late 1990s, fintech entered a new era. Startups and established banks alike began leveraging the web to offer innovative financial products and services. Online brokerage firms, digital payment platforms, and personal finance management tools became widely available. The internet made financial services more accessible, competitive, and user-friendly, fueling rapid growth in the fintech sector. Introduction of smartphones in the 2000s brought about the mobile banking revolution. Banking apps allowed users to manage accounts, transfer money, and even deposit checks using their mobile devices. This shift made banking truly portable and accessible anytime, anywhere. Mobile banking has become a standard feature for banks worldwide, further integrating technology into everyday financial activities. Digital payment platforms such as PayPal, launched in 1998, and later services like Apple Pay and Google Pay, have transformed the way people pay for goods and services. These platforms offer secure, fast, and convenient payment options, reducing reliance on cash and checks. Digital payments have become a cornerstone of modern fintech, enabling seamless transactions both online and in-store. Peer-to-peer P2P lending platforms emerged in the mid-2000s, connecting borrowers directly with lenders through online marketplaces. This innovation bypassed traditional banks, offering more flexible terms and often lower interest rates. P2P lending democratized access to credit and opened up new investment opportunities for individuals, highlighting the disruptive potential of fintech. Crowdfunding platforms like Kickstarter and Indiegogo have enabled entrepreneurs to raise funds directly from the public. By leveraging technology, these platforms allow individuals to support projects and businesses they believe in, often in exchange for rewards or equity. Crowdfunding has become a vital source of capital for startups and creative ventures, showcasing fintech's role in financial inclusion. Blockchain technology, introduced with Bitcoin in 2009, has had a profound impact on fintech. Blockchain is a decentralized ledger system that enables secure, transparent, and tamper-proof transactions. Its applications extend beyond cryptocurrencies to areas like smart contracts, supply chain management, and digital identity. Blockchain's potential to disrupt traditional finance is still unfolding. Launch of Bitcoin in 2009 marked the beginning of the cryptocurrency era. Cryptocurrencies are digital assets that use cryptography for security and operate independently of central banks. Since Bitcoin, thousands of cryptocurrencies have been created, each with unique features and use cases. Cryptocurrencies have introduced new possibilities for payments, investments, and even fundraising through initial coin offerings, ICOs. Robo-advisors are automated investment platforms that use algorithms to manage portfolios. Launched in the early 2010s, these platforms make investing more accessible by offering low-cost, personalized advice without human intervention. Robo-advisors have democratized wealth management, allowing more people to benefit from professional investment strategies. RegTech, or regulatory technology, refers to the use of technology to help companies comply with financial regulations efficiently. These solutions automate compliance processes, monitor transactions for suspicious activity, and ensure adherence to complex rules. RegTech has become essential in an era of increasing regulatory scrutiny, reducing costs and risks for financial institutions. InsurTech, a blend of insurance and technology, has transformed the insurance industry. From digital policy management to AI-powered claims processing, InsurTech companies are making insurance more accessible, efficient, and customer-friendly. These innovations have improved risk assessment, reduced fraud, and enhanced the overall customer experience. Open banking initiatives encourage banks to share customer data securely with third-party providers through APIs. This approach fosters innovation by enabling new financial products and services, such as budgeting apps and payment solutions. Open banking empowers consumers with more choices and greater control over their financial data. Artificial intelligence (AI) has become a driving force in fintech, powering everything from fraud detection to customer service chatbots. AI algorithms analyze vast amounts of data to identify patterns, predict trends, and automate decision-making. The integration of AI has made financial services more efficient, secure, and personalized. Biometric technologies such as fingerprint and facial recognition have enhanced security in fintech applications. These methods provide a more secure and convenient way to authenticate users, reducing the risk of fraud and unauthorized access. Biometric security is now standard in many banking and payment apps, reflecting the ongoing evolution of fintech safety measures. Contactless payment technologies, including NFC-enabled cards and mobile wallets, have made transactions faster and more convenient. Users can simply tap their card or phone to pay, eliminating the need for cash or physical contact. The adoption of contactless payments has surged, especially during the COVID-19 pandemic, highlighting fintech's role in adapting to changing consumer needs. Digital-only banks, also known as neobanks, operate entirely online without physical branches. These banks offer a range of services through mobile apps and websites, often with lower fees and innovative features. Digital banks appeal to tech-savvy consumers seeking convenience and flexibility, further driving the digital transformation of finance. Tech has played a crucial role in promoting financial inclusion by providing access to banking and financial services for underserved populations. Mobile money platforms, microloans, and digital wallets have empowered millions of people worldwide to participate in the formal economy. These innovations are helping to bridge the gap between the banked and unbanked. Emerging markets have become hotbeds for fintech innovation. In regions where traditional banking infrastructure is limited, mobile payment and lending platforms have flourished. Companies like M-Pesa in Kenya have demonstrated how fintech can drive economic growth and improve financial access in developing countries. Data analytics has become a cornerstone of fintech, enabling companies to process and analyze massive amounts of information. By leveraging big data, fintech firms can offer personalized products, detect fraud, and improve risk management. The ability to harness data effectively has given fintech companies a competitive edge in the financial industry. Cloud computing has transformed the way financial institutions store, process, and manage data. By moving operations to the cloud, banks and fintech companies can scale quickly, reduce costs, and enhance security. Cloud-based solutions also enable faster deployment of new products and services, supporting the rapid pace of fintech innovation. Application programming interfaces (APIs) have become the backbone of modern fintech ecosystems. APIs allow different software systems to communicate and share data securely, enabling seamless integration of services. This interoperability has fostered collaboration between banks, fintech startups, and third-party providers, driving innovation across the industry. Digital identity verification solutions use advanced technologies to confirm the identity of users online. These systems combine biometrics, document scanning, and data analysis to prevent fraud and comply with regulations. Digital identity verification is essential for secure onboarding in fintech applications, ensuring trust and safety for both providers and users. As fintech has grown, so has the importance of cybersecurity. Protecting sensitive financial data from cyber threats is a top priority for fintech companies. Advanced encryption, multi-factor authentication, and real-time monitoring are just a few of the measures used to safeguard digital financial services. Cybersecurity remains a critical focus as fintech continues to evolve. Social media platforms have become important channels for fintech marketing, customer engagement, and even service delivery. Some fintech companies use social media data to assess creditworthiness or detect fraud. The integration of social media and financial services reflects the growing influence of digital platforms in the financial sector. Personal finance apps have empowered individuals to manage their money more effectively. These apps offer budgeting tools, expense tracking, investment advice, and goal setting, all from a smartphone. The rise of personal finance apps has made financial literacy and management more accessible to people of all ages and backgrounds. Wealth tech refers to the use of technology to enhance wealth management and investment services. From automated portfolio management to digital financial planning, wealth tech platforms offer sophisticated tools for both individual investors and financial advisors. These innovations have made wealth management more efficient, transparent, and accessible. PropTech, or property technology, is transforming the real estate industry through digital platforms for buying, selling, and managing properties. Fintech solutions in PropTech include online mortgage applications, digital escrow services, and real estate crowdfunding. These innovations are making property transactions faster, more transparent, and accessible to a wider audience. Payment gateways are essential for processing online transactions securely and efficiently. These platforms connect merchants, customers, and financial institutions, enabling seamless payments for e-commerce and digital services. The evolution of payment gateways has supported the growth of online shopping and the global digital economy. Tech has revolutionized the remittance industry by making cross-border money transfers faster, cheaper, and more transparent. Digital remittance platforms use technology to reduce fees and processing times, benefiting millions of migrant workers and their families. These improvements have had a significant impact on global financial inclusion. Supply chain finance platforms use fintech solutions to optimize cash flow and reduce risk for businesses. By digitizing invoicing, payments, and financing, these platforms improve transparency and efficiency in supply chains. This innovation helps companies manage working capital more effectively and strengthens business relationships. Embedded finance refers to the integration of financial services into non-financial platforms, such as e-commerce sites or ride-sharing apps. This approach allows users to access banking, payments, or insurance services seamlessly within their favorite apps. Embedded finance is expanding the reach of fintech and creating new opportunities for businesses and consumers alike. Sustainable finance platforms use technology to promote environmentally and socially responsible investments. These platforms help investors align their portfolios with their values by offering tools to assess the environmental, social, and governance (ESG) impact of their investments. Fintech is playing a growing role in supporting sustainability goals worldwide. Central banks around the world are exploring digital currencies known as CBDCs. These government-backed digital assets aim to combine the benefits of cryptocurrencies with the stability of traditional money. CBDCs could transform payment systems, enhance financial inclusion, and reshape the global monetary landscape. Quantum computing holds the potential to revolutionize fintech by solving complex problems much faster than traditional computers. Applications include advanced risk modeling, cryptography, and portfolio optimization. While still in its early stages, quantum computing could unlock new possibilities for financial innovation in the future. The rise of the gig economy has created new demands for flexible financial services. Fintech companies are developing solutions tailored to freelancers and gig workers, such as instant payments, income smoothing, and benefits management. These innovations are helping gig workers manage their finances more effectively in a rapidly changing job market. Behavioral finance combines psychology and technology to help people make better financial decisions. Fintech apps use insights from behavioral science to nudge users towards saving, investing, and spending wisely. By understanding human behavior, fintech companies can design products that encourage healthier financial habits. Super apps are platforms that combine multiple services including payments, banking, shopping, and more into a single app. Popular in Asia, super apps like WeChat and Grab have integrated fintech features, making them central to users' digital lives. The rise of super apps demonstrates the convergence of technology and finance in everyday activities. Voice technology is making its way into fintech, allowing users to conduct banking transactions and manage finances using voice commands. Virtual assistants and smart speakers can check balances, pay bills, and provide financial advice. Voice technology is enhancing accessibility and convenience for users, especially those with disabilities. Tech is reshaping the future of work by enabling remote collaboration, digital payroll, and flexible benefits. Companies are leveraging fintech tools to streamline HR processes, manage expenses, and support a distributed workforce. As work continues to evolve, fintech will play an increasingly important role in supporting both employers and employees. Historical development of fintech is a story of continuous innovation and adaptation. From the telegraph to blockchain, each technological breakthrough has transformed the way we interact with money and financial services. As new technologies emerge, fintech will continue to evolve, shaping the future of finance for generations to come. Thank you for joining us on this journey through the fascinating history of fintech.